Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing AbbVie stock so we can determine if it's a buy or a sell. AbbVie is one of the largest biomedical companies in the US. Their main product is Humira, which treats autoimmune diseases including rheumatoid arthritis, Crohn's disease, plaque psoriasis, and much more. The company is headquartered in North Chicago, Illinois, and was founded in 2012. The ticker trades on the New York Stock Exchange, Deutsche Börse, Mexican Bolsa, Vienna, and London Stock Exchange. Let's get started with the model. This is a large cap company, 284 billion market cap. They're trading at 161 a share, and they have 1.8 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They generate tons of free cash flow. It peaks in 2022 at 25 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also peaks in 2022 close to 12 billion. Revenue is the sales for the company, and that grows each year from 33 billion way up to 58 billion. Let's look at their capital structure. 17 billion of equity, 63 billion of debt. They're 21% equity, 79% debt. Their net debt is 54 billion. So that implies they have 9 billion of cash on their balance sheet. And I gave them the middle whack on Finbox, 8.8%, and that's the discount rate we're going to apply to the future cash flows. We estimate 4 years of future free cash flows. We also estimate a terminal value, which is all cash flows past year 4, that's 380 billion. We discount those numbers back to today using the weighted average cost of capital, and we get a value of the company of $345 billion. We divide that by 1.8 billion shares, and we get a calculated stock price of 196. They're trading at 161, so they're trading at an 18% discount. It's a buy according to the model. The website Simply Wall Street's valuation is 279. They're saying it's 43% undervalued. 12 analysts priced this stock, and the average price target is 164. The low is 133, the high is 190. This is where the stock has been trading the last 5 years. Most pharmaceutical stocks are well above their pre-COVID levels. This peaked at 175 at the very beginning of 2022. Then it came down to about 135, and it has come back up since that bottom. So I think there's a lot more upside than downside with this stock. Of course, if there's a recession, then the majority of the market will decline. A great thing about this company is they have so much free cash flow, they can raise their dividend each year. It was 96 cents in 2018, then $1.07, $1.18, $1.30, $1.41. Now it's up to $1.48, a yield of 3.7%. And they can afford that. It's only 42% of their free cash flow, 88% of their net income. There are 15 companies in the same industry as AbbVie, and if AbbVie has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They don't spend that much on CapEx, only 700 million. They have a pretty poor debt to equity ratio. For every dollar of equity, they have $3.70 of debt. Their yield is the same as their debt to equity ratio. I think that's the first time I've seen that. 3.7%, which is higher than average. They generate lots of free cash flow. They're the 4th largest company in this industry. Johnson & Johnson is the largest. I own that stock. Their price to book is worse than average, PE about average. The most important ratio is price to free cash flow, and that is better than average, and their price to sales is pretty close to average. They generate lots of revenue, and their 5-year annual revenue growth rate is growing at 16%, which is higher than most companies on this list. The ROA is 8%, and look at their ROE, 69%. So they do a great job at using equity to generate a profit. That's what ROE is, net income over equity. So to summarize, I have them trading at an 18% discount. I rank their free cash flows 8 out of 10, their revenue 8 out of 10, and their ratio 6 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.